Hi, welcome everyone to today's panel session with leading experts on answering the question, how to change in payments through fintech partnerships. My name is Robert Mancini, and I will be your moderator for today's session. So a little bit about myself, and then I'll turn it over quickly to each panelist to self-introduce in about a minute. So first, about myself, I started my career actually in Canada back in 1991, working for Bank of Montreal. Since then, I have worked for 3 global banks, 2 US global banks, 1 Japanese global bank. And I also worked on the consulting side for years, as this is where many bank executives like me know me from. In my last role, before joining Finastra 3 years ago, I was head of commercial banking for an international bank, reporting to the vice chair. And it's my privilege for me to be here today. And thank you all in advance for having me, and look forward to sharing insights and learning from everyone. I'll turn it over to the panelists so they can self-introduce themselves. So we're going to go ladies first, and then we'll go alphabetical order with the gentlemen. So Cathy, then Asad, then Derrick, then Dougal. Cathy, over to you.
Thank you, Robert, and thank you everyone for joining this panel. I'm delighted to be part of this conversation. So I've been around payments for 20 plus years. Robert, we never had a chance to meet at BMO. I didn't realize you were there as well. So I started back in the BMO days and worked on things like ATMs, when ATMs were going to go the way of the dodo bird. You know, fast forward 20 plus years, we still have ATMs. Also had the opportunity to work on Bank of Montreal's first wireless banking solution, where you had to press the number 3 to get the letter C 3 times. Fast forward from there, worked on cash management products and heading the team up at Bank of Montreal, moved into a technology role at CGI, where I took care of the payment solutions that we were offering to banks around the world. And continuing on the international flavor, I've been with HSBC for the last 5 years, starting in a product capacity. And in the last 4 years, I've been running the client management team. So this is the team that takes care of onboarding and servicing all our customers, from small business through to global multinational companies. So I'm delighted to be here today and share some pearls of wisdom with the group, and also engage in a active and engaging conversation with my colleagues. Asad, over to you.
Thanks, Cathy, and thanks, Robert. Glad and excited to be here. I have about, I would say, 70 years of experience in payments, with a diverse background in finance, auto finance, healthcare, telecoms, a whole bunch of other industries. So that brought me here, the payments modernization, the exciting opportunities that I'm taking advantage of. In TD, I'm leading the business architecture practice for enterprise payments. It's a North American practice. It's a team of bright minds, I would like to say, strategists, innovators, and subject matter experts. What I like to say about our team is where payments dreams come true.
Yes, hi, good morning, everyone. So my name is Derrick Walton. I've now been working with Bank of America for 2 years. I look after the GTS Head of Emerging Payments and Innovation. This is my first bank that I've worked at. Before this, I've mostly worked at Fintechs and MSBs for the last 15 years. Basically working on international activities and products. Currently, right now, I seem to work on everything, since the landscape changes very quickly and all the time. That means everything from digital wallets, ALS-based payments, to blockchain and distributed ledgers, anything that's out there that we can bring in. And really looking forward to the questions and the conversation. Turn over to Dougal.
I'm Dougal Middleton from Scotiabank. I'm the Vice President of Enterprise Payments, currently responsible for the delivery of our enterprise payments strategy and execution of our modernization program, as well as the digital enablement of our payment services for our corporate and commercial client base here in the transaction banking space. Got a career in transaction banking across many different facets of the domain, including corporate and commercial client integrations and targeted solutions, as well as product management and product development activities. So lots happening in the payment space here over my career. I think the pace of change now is obviously greatly accelerated, especially under the backdrop of the pandemic, and it's an exciting time to be immersed in payments with the fine folks here today.
Great. Thank you all for that. And it's my privilege to be here today as a moderator for such a distinguished panel. So the plan for today is we're going to go through a series of questions for the panelists, and then what's going to be followed by an open Q&A from our audience, right? So we want to engage the audience at the end. But first, let's level set on the current environment across our industry. So, you know, to say there's been a lot of going on at the moment at the industry, I think would be a major understatement. Most think about COVID and its hyper acceleration to digital. But I think even before that, right, we had elements of regulation reform, new entrants, both direct and indirect, changing customer expectations in a way that we've never anticipated. And as if that's not enough all at once, then, we have new technologies that are not just making banks think about modernization, but even how to reconcile the technology impacts to evolving business and operating models, along with transforming customer experiences from solutions to onboarding to servicing to managing those vital relationships. So in my view, the problem statement is quite clear as banks need to accelerate their transformation to meet those continuous, rapidly evolving customer needs. And they'll not be able to accomplish those on their own within their four walls. I'm quite confident that very few would challenge that statement. So now that we have zeroed in on the problem, we can surely all agree that banks will need to foster a new model of collaboration to innovate across the ecosystem. And ideally, this new model will need to be agile so that the banks can swap in and out the ecosystem partners, such as Fintechs, as they see is the right fit for their customers. Speed, obviously, as banks will need to accelerate their time to market as customer expectations are evolving quickly. And, 1-2 year lead times for product development just won't cut it anymore. And then 3, cost, as this interoperability model, right, must accommodate a strong economic support to satisfy all parties within this ecosystem. And then finally, control. I think that's important as the banks want and must remain central to their customer relationships and equally maintain that level of security and control over data and the key elements. So this kind of all brings us, back full circle here to fintech partnerships as it addresses all of these 4 points. And so with this as a backdrop, I'd like to engage the panelists to share their views. So the first question, and we'll kick it off with Dougal here. The question is, outside of the regulatory space, where do you see the biggest drivers of change for banks and why?
Yeah, thanks, Robert. I really think just the scale of change globally is a massive push for it, is a big part of it. The widespread nature of change globally, the borderless nature of payments, it's never been easier to send money globally, and there's so many different services and places that customers can choose to kind of anchor themselves around to be able to affect the transfer of value globally. That's driving an uplift in both the needs and the rapid expansion of those needs, but also the rate of change that's happening. You pair that up with global consumerization activities, right, where we expect certain things as a consumer because of our frictionless mobile tendencies. You bring that into the workplace and the corporate and commercial space, and a lot of the old way of doing things is sort of being questioned, disrupted, and actively sought solutions for. So it's a really big push. And when you've got the global scale of all FIs sort of participating in their own jurisdictions where they do business, you've got this cohesive sort of uplift that everybody's sort of having to up the game to compete on that global scale and really make sure that we can deliver those end user experiences that are now baseline expectations effectively.
To support what Dougal said around the customer and globalization. So, I don't think we have to look far or look back very far with how COVID has changed our purchasing behavior. I don't know about you guys, but I have an Amazon package showing up on our doorstep multiple times through the day. And it's not just me, it's my husband, it's my 2 children. So the consumers are just expecting this to all work and the payment to all work, whether you're a 16-year-old teenager or a middle-aged parent at home. So this globalization of commerce has really created this borderless world that we live in, and customers are impatient. I'm impatient. I think in the past, I would tolerate a platform that took a long time or wasn't self-sufficient. But in this day and age of everything being Appleized, and I apologize, I'm using that as a verb, but the experience on the Apple is so seamless. It's thought about all the things I will mess up as well. So being able to think ahead and help our customers prevent themselves from making mistakes is where we need to go. And that customer impatience, to me, I think is the single biggest driver of change. Because if we don't address that, we won't have customers and we won't be around. That to me is, aside from the regulatory change, the change from a payment infrastructure and technology and standards, but it's this impatience that I have, and I believe all our customers, whether retail or commercial. I don't know if Asad or Derrick, you have any other different views on that?
No, I totally agree. I mean, the way we are behaving these days, our customers, especially in the retail segment, are driving quite a few things. What I also want to add a little angle here is it's not that the external ecosystem or the customers are always driving the change and forcing the banks to change. It's both ways. So even if you think about the past decades or centuries, banks have been driving change and have been enabling us the way we live our lives. And that's a partnership, or that's a whole ecosystem play. That's how I see. And that will continue to evolve. Whether it's the customer driving the change, or whether it's a pandemic that's triggering the digitization, or it's the Apples or the Googles who is changing how what's the expectation from a customer point of view. Banks have always been on the forefront. I mean, look at us. I mean, we all have a 21st century app in the marketplace. I mean, probably one of the highest downloaded apps would be some of the financial apps that's there. So it's not that it's a one-way street, meaning banks are getting cornered and by all the changes. It's a partnership. That's how I see.
Yeah, I think you're right. I think it's a partnership. I look at it as there's an expectation now in the marketplace of what's going to be given to them. I think about how the simple fact of when you think about where Uber it's not so much that you're just ordering a car. You're ordering a car and you're watching that car go down every street, every map. You know the street light is stopping at and when it's going to get there. But I will tell you, when you wait for a bus, the things that you hear when people are like, where's this bus? Why can't I just see it on an app? There's an expectation from consumers in the marketplace that you have this technology. Why aren't you giving it to me? You know, and I think that where it comes from the bank side of things is to take all this data that we're starting to throw out there and all these experiences and add a regulatory structure around it, right? Or a security structure to it. Because to your point, there's always been this divide and a balance beside saying, I can give you a lot. At the same time, I need to make sure that experience, to Cathy's point, is seamless and security that goes along with it is clear. Because if it isn't, then you have a lot of problems where fraud just takes shape. And to your point is, it's cool to use, but boy, does it take forever to log in. Those things are problematic.
Thank you all for your insights. One common theme in your responses is customer experience. And I really, really like that, we all really start with the people first approach, and then the technology follows suit, really comes second. And when you think about it, right, this is how we arrived at our current level of disruption in today's lives. We're impacted by digital journeys through and new customer experiences that made consumers and businesses think this is the type of experience that they want from the bank, right? So as per the examples that you've all highlighted. But just to kind of take it one step further, right? I think that banks have a tremendous opportunity here. To take a lead in disruption. If you look at some of the research that's been done, and I'm not going to cite all the different research, but through numerous different industry organizations, they've showed that banks really remain a trusted partner for financial services. So customers out there do want to do business with their banks. Banks are in the lead there, and they do own that customer relationships. And I think that, given everything that's going on, banks can pivot from a reactive mode to what we're seeing in the marketplace to more of a proactive mode, right? In establishing a new experience as it relates to customer engagements, from delivery solutions, that you're delivering to the customers, to taking a more frictionless approach, which is something that Fintechs do really well, and to actually managing those relationships with more anticipation of the customer needs by leveraging the data and the technology, right, as an asset to be able to do that. And then if you want to even take it one step further, it really wouldn't hurt, right, for banks to take a peripheral vision to see how they can expand their services from traditional to opportunities that will help drive new revenue streams. So I see Uber really as a payment platform for the transportation sector, right? And believe that embedded payments like this will soon shape other sectors when you think about healthcare and insurance and other sectors out there. So my question, and Asad, maybe I'll start with you on this one, is how bullish should banks be around this change?
I'll take the word trust and I'll start from there. So I think that's the core business model of banks are evolving around trust and evolved around trust. If you think about how we move money today, if you think about all the rules, regulations, the regulatory bodies, the everything that we have, the SWIFTs, Payments Canada, Federal Reserve Bank, anything that you think of today, all it does, it creates a framework of trust so that the entities in that network can trust each other to transact. And that's where payments evolve. And that has not changed, and that will not change in the foreseeable future. To start with that, how do we package that? How do we present that trustworthy platform to our consumers? That's changing, that's evolving. And I will say I'm very bullish about where banks are today and where are we going. So embedded payments is one of the elements that I think everyone is looking at, and that's existing also in some form or shape today. We are all working to fine tune and polish it further to make it more consumer friendly, as Cathy was alluding to earlier. It's the experience, the end experience to our consumers, that's what making it attractive. I would also point out that it's not just retail customers, right? Like mobile phones or tablets were not used to be a device where a CFO would approve or disapprove the payments or transactions, but that's true now. So we have to think about from a commercial and business angle as well. The second point I would mention why I'm so bullish about banks. You mentioned Uber as a payments platform for the transportation economy or the transportation area. If you think about from the same angle, banks have been the payments platform for everything. I mean, starting from our education to like buying our first house to getting married on our first date and everything. I mean, that has been the payments platform for us. We haven't used the data, or we haven't used the insights that we can retrieve from the data that we have, as well as some small companies do. There are other challenges around doing that. There are privacy and legal challenges, and we have respected them just to not to harm the key equity, which is trust. So if I play these two things together, on one hand, we have to maintain the trust, and the other hand, we have to gain the value and the insights out of the data we have. It's a trade-off that will decide where are we going and how successful and how bullish we will be about our future in embedded payments or the ecosystem of payments and so on and so forth. And we are seeing that quite a few banks have really taken that forward, and again, quite positive. Anyone else want to pitch in here?
I'm happy to pitch in. So the trust aspect is the starting point. Absolutely, that's the value proposition of a bank. I think the buyers of payments are changing. So traditionally, and my background is predominantly in commercial cash management products, the buyers are the Treasury Department. So the treasurer, the AP, the AR clerk, wanting to ensure payments and receivables flow properly, the reconciliation information is there. Where I'm seeing things change right now is the IT department has a bigger and bigger voice in that buying decision. How easy is it to integrate? Does this financial institution have a solution set to be able to plug my incredibly niche enterprise resource payments planning solution, because I'm in the soda manufacturing business? So we're really having to think about who is buying the solution that we're offering. And that's a different value proposition. So what is the IT department looking for versus a treasury department? And I would push that even further when we think of, the ultimate nirvana is a market of one, that the solution is tailored only for me. We're going to see, whether that's in the retail space, commercial, corporate, we're going to see much more tailored solutions because the data is there. And APIs is opening up that capability. So as a financial institution, being able to think about those developers, because those developers are looking at these embedded payment solutions and asking themselves, how easy is it to get that information from that bank? How easy is it for me to solve anything I come across when I'm building the API connections for that soda manufacturing company? And how easy is it for me to service the end customer if something happens? So to me, I think I'm very bullish, much to you, Asad. I think banks are all pivoting and thinking this way. It's a different skill set. And we do need to leverage partnerships in order to make this happen, because we're banks. Being able to work with and sell to developers, those are different skill sets that we need to either develop or partner with. So that's kind of where I see and like to play off what you just added.
Great points, Cathy. I'll just dive in there. Trust is a huge part of it, Asad, as you mentioned. That kind of gets the anchor point for where the bank plays. But to Cathy's point, these ecosystems that are evolving, it's not just about necessarily the end consumer experience, et cetera, but where you've got sector-specific activity happening, there's different players in the ecosystem and different platforms at play that maybe the traditional model of offering payment services and various services to these corporates that play in these ecosystems just doesn't really work, because when you scale these things up, the swivel chair between different digital experiences, it just doesn't work anymore. And so how do you take your asset base or your various tools in the toolkit, and to Cathy's point, deliver it into the developer communities and allow them to innovate their own experiences and innovate their end-to-end activities? I think there's a big part there for banks to play, and that's why we're very bullish on this front, because there's a lot of different tailoring that can take place, and banks, to Robert's opening remarks, can't really go it alone in some of these places. It's not about being something to everybody anymore. It's about playing to your strengths as a bank and playing to your customer strength and helping them along whatever choices they're making for their digital experiences. You need to be able to enable that, and to enable that, you need the right service set and skill sets within the bank to be able to support them. So where do you leverage the banking experience and the trust with the bank to really build a bigger ecosystem and a better ecosystem for a given sort of sector or consumer experience as a retail play, versus building a bigger bank that's going to do much more as a traditional bank, so to speak?
Yeah, Dougal, I think it's there's also that big part of, I think a lot of times we think of fintechs and we think of that old place coming out of a garage shop, but fintechs are multi-million, if not billion-dollar businesses now. And I will tell you, when I used to come from one, is where a bank would work in a niche market and they would say, we'll put about $20-40 million towards it. There is a fintech who's putting $200 million at it, focusing on that niche market, and that's what you're up against. So it behooves that bank to quickly partner or to struggle to try to keep up with that agility of that one fintech who's putting all their time. So as bullish as I am, I also don't want to put everything on my shoulders, and know that there's a lot of people out there that I will partner with in order to deliver to market, because a lot of times banks do not have the agile systems, especially some of these big ones that we all work at, in order to move as quickly as some of these fintechs. And I feel like you have to use the value added they can bring, that they can be agile. They're not as regulated, so you can take that regulation on and kind of make sure they're tailored to what you need them to be. So I think there's a lot of value that kind of comes from partnering. But I think to everyone's part saying is, whatever a bank does not develop, there is a fintech who sees a gap and they're going to go for it.
I think what Robert started off by saying, 4 things: agile, speed, cost, and control. And Derrick, I think what you've just summarized is fintechs are required if we're going to get the agile, because we know that there's different speeds at different banks, and legacy systems can be a bit of an anchor. Speed, also being able to do it quickly. The cost angle and the control, I think, is a space where the banks do well, because we've been built on the foundation of trust, and build in controls and a lot of due diligence and a lot of checks and balances. So when you put those all together, it sounds like a really powerful marriage to start off. I think Asad talked about dating, but just to tie it all together.
I think that's great. Thank you, Cathy, for adding that comment at the end. So I think the message here is building a bigger ecosystem and not a bigger bank is a key, right? And at the risk of repeating myself here, so we know that banks own the relationship, but fintechs really want to participate in order to access siloed opportunities for revenue growth. So some of your customers in specific areas where they're investing in, right? So the whole concept that was brought up around some fintechs investing hundreds of millions in certain siloed capabilities, the bank can leverage that, right? So now the banks have the ability to leverage countless fintechs to develop their own unique and high value proposition end to end via new technologies like open platforms, right? And this concept, right, this squarely puts the bank in the driver's seat. And really the fintechs are sitting in the back of the bus and supporting the banks while eliminating the risks for fintechs to overtake the bank's role as the bus driver, if you want, or disintermediating the bank from its customers. So this is really, the silver bullet here to eliminating retention risks, augmenting customer acquisition, while keeping your customers very happy, and your bank with the ability to keep driving up revenue. So leading into my next question here, we're seeing more and more that fintechs can support a bank's digital transformation and value propositions for their customers in response to changes in the customer demands and expectations. So the question, and I'll start with you, Cathy, are you able to share any examples of how you've embraced this or seen examples of it?
Sure. So the example I'll use is within the client management space that I have the opportunity to lead. An EFT is an EFT is an EFT. So whether it comes from Scotia, TD, B of A, HSBC, an EFT is an EFT. It's how payments are. They're ubiquitous. They have to be standard. So it's hard to compete on the EFT itself. Where we're competing is on the client experience. And that's the opportunity to differentiate the experience for our clients. So how we onboard our clients, how we service our clients when there's an issue is a key area of focus for us, for myself and my particular team. And clients are impatient. Once a mandate is won, there's a desire to move quickly and onboard and move all the platforms from one financial institution to another. So that aspect of time and speed and doing it quickly and easy is important and at the forefront. And it's not easy to do. It is not easy to unplug the wires, the cords from one bank into another bank. So one of the things that we've been able to do in partnering with a large fintech is figure out a way using robotics processing automation to facilitate that onboarding experience so that we're able to bring that onboarding time down to half the time and help our clients. Once they made the decision they want to go, I don't know about you, but I want to order something I want on my doorstep now. And so this is where we've been able to leverage assistance and make that happen much faster. So we've been doing it from a speed perspective and also much more economically, because that's the other aspect that we've been able to leverage in this fintech partnership. And we're going to see more of this. So it's not just about the specific payment itself, whether it's a real-time rail or a virtual account, which are other areas that you could partner with from a fintech, but also thinking about where those places are to differentiate yourself. And that's what we've done specifically in my group. So that's my example that I wanted to share with the team. It was very niche, very specific, but I'm really proud of the work we've been able to do and shave that time to implement by half.
Awesome. I can dive in just to piggyback a bit on that. I think, Cathy, that's a fantastic example of some of the opportunities there. The cash management space is a broad one, and there's lots of different activity happening there. It's not as stable as it used to be, and there's a lot of opportunities still out there to do more with partnerships. But at Scotiabank, when we look at various opportunities, the payment space is so broad, and the different markets that we're in. I can appreciate Cathy and Derrick, like the global footprints that we have. Different markets dictated a certain different dynamic when you start to approach your strategies and where you might leverage partnerships. But we touched on speed to market and the market size being sort of a key differentiator or a decision point in terms of the type of investment that you need to kind of get some success. I can't publicly share many of the examples, but if you look at a lot of the high growth areas, whether it's the e-commerce or the acquiring space, banks that may not have in-house acquirers. There's a lot of partnership opportunities out there as a result of that, because that value chain in e-commerce is so broad, and there's a lot of different places there for banks to partner to deliver end user value for both the merchant and the consumer side of things. And that's variable across the geographies that we do business in. And even when you start to look at how you can start to implement a better payments network or payments capability, partnerships are key. We launched a service in Peru with Plin through a consortium of banks and Fintech that's been recently purchased by Visa, Yellow Pepper, and that deployed the first real-time payments network in Peru that's offering some peer-to-peer capabilities, but also starting to branch into some of the e-commerce and the point-of-sale type activities. So those types of consortium plus partnerships can drive a lot of scale and a lot of mass benefit to end users, and in the right markets, it can drive a lot of transformation change that is very rapid.
I think it's hard sometimes when people now use your real-time payments part, which is a great example of a technology that everyone's talking about, everyone knows about. And a lot of times I think people get really wrapped on the axe around the technology about that you're bringing in there, connecting to the association in different countries. But I think towards Cathy's part, this is where the experience really comes in. Because all of a sudden, once you start doing real-time payments, the banks are starting to do things that we typically haven't done before, which is to operate 24/7. And that changes the operations, it changes compliance, it changes every component. The idea of banking hours sort of disappears, right? So we're basically changing a lot of our infrastructure and our people culture on how we operate. The second part about this is to use real-time payments, we used to have to use clients to really ingest it or consume it, you need to have APIs. Now all of a sudden, clients have to change their way in which they operate, and they're going to have to embed or develop a connection to the bank. And to Cathy's point, if that part is bad, then you're not bringing on clients to use your API to do real-time payments. These are things all around the technology of connecting and offering the payment type. These are experiences that the clients and the consumers have to get around just to utilize it. So if you imagine every single payment that's coming from here, nothing's going to be moving slower from this point forward. Everything's going to be moving fast. Everything's going to be 24/7. So if you don't get these experience, these connections right, you basically set a bad path going forward.
And just quickly, this thought I've been circling in my brain. So the definition and the perspective around fintechs have also evolved. Fintechs always meant, like when I heard the word fintech, it automatically portrayed a startup company, small company in my brain, but that has changed over the past few years, right? So, and as I was hearing to Cathy and Dougal, and the partnerships that we are going through, that we are making these days, are with huge fintechs like the Visas and the Mastercards of the world. So they have evolved in terms of user experience. They're also thinking about the end user experience, and it has been evolving. So as soon as that perspective has changed, the size of the fintechs have grown, more and more companies are operating as fintechs. I think we'll see more and more partnership coming up, and the end consumers and customers will get more value out of these relationships. So that's a quick add-on.
Sorry, I needed to unmute myself. I was taking some notes while you guys were talking. All really good points. So I think that you hit on an important point, Derrick, on the operational changes in this new era, whereas, obviously the collaboration helps address some of the hurdles that you brought up. Dougal, equally, you bring up a good point in that banks can leverage fintechs in a segmented approach versus a holistic approach, right? Not one size fits all. And I think your example on the different geographies and how they can do that, I think is a perfect example. In fact, I would take this to another level and say that banks should also be considering, not just from a geography perspective, but maybe looking at it from the different segments, right? Cathy spoke about the treasury management and for their commercial and corporate customers, but also verticals, right? If you're specific verticals you want to get into, maybe even verticals that banks have not played in before, and they're entirely new markets, new opportunities in the market that banks may not have considered, probably because, or likely because the banks didn't realize that they can bring value there. but now they can via leveraging these fintech partnerships. And then Asad, I think your point that you made about fintech evolution, and that's a very important point in terms of the operating models, right? But I think at the end of the day, we need, the bottom line there is we need that collaboration to drive up that value proposition. So regardless of that fintech evolution, which is a very good point, I think it all drives kind of the same conclusion. I just want to kind of build off of this. And Cathy, you mentioned cash management and treasury management services earlier. So I agree and see that cash management is really being top of the food chain for a lot of reasons, right, for the banks. And it's sometimes approached in a way that, they're just putting a new user interface in front of it. And basically that's going to help drive the value. But I think that the fintechs really do bring much more to the value proposition for banks. Is this something, Cathy, that you see and maybe you can elaborate on?
Sure. Historically, banks, having been in the payment space for a few years, we start with a retail online banking platform. That's where all the volume is. That's where you spend all the attention. And then it evolves to focusing on the commercial corporate space, because those are not many transactions, but they're very rich transactions, and there's a lot of fee revenue, and more importantly, interest revenue. So to me, that's sort of how it's evolved. And then there's the forgotten small business segment, which fits in between those, but it really is a very different segment, because a small business user is a professional baker. They don't understand beneficiary deduct on wire payments. And so being able to have a different experience for those small business users that don't have the time, nor do they have the passion or interest to understand payments like we do. So if you think about it, if we had to start anew, those are three very different banking platforms. Three very different platforms that if I think anyone around this virtual camera, virtual room, we would design it very differently. But we've got a legacy. So I think over time, we've evolved as an industry to build additional capabilities on the platform. I've certainly seen a lot of different fintechs, whether it's being able to offer a virtual account solution or cash flow forecasting, or even facilitate cross-border payments. There's a number of fintechs, whether they're small out of a garage or a large fintech like Finastra, that have helped facilitate that. So I think it's sort of a convergence right now. We know that it's incredibly difficult to eliminate or replace legacy platforms. It's near impossible. I mean, that's a multi-year journey. It's a multi-million dollar expense. And so being able to leverage fintech partnerships and build building blocks on top of that to over time change that entire infrastructure is the path that I've been seeing from an industry perspective. And it's bearing fruit. Like I'm seeing more of us talk about virtual accounts as an example. And that's a very specific solution for the corporate commercial segment. So that's kind of my view on how I see it happening. My final point on this is I'm also seeing an evolution as we, as an industry, collectively think of not just the product. I think to Derrick's point, real-time payments, cool, but we really need to think about how do we onboard that client to the real-time payment? What's that experience going to look like? And more importantly, how are we going to service that real-time payment that is 24/7 when something goes bump? So it's not just the online platform, it's I think a maturing of our collective thinking to think about that full end-to-end journey. I don't know if others have a viewpoint on that, but that's my view from a cash management perspective.
Yeah, it's such a wide domain. The concerns of a corporate treasurer and the cash management functions in a corporate are widespread, right? And a lot of the treasury ops teams are continue to try to do more with less and try to get more and more efficient with how they do things and automate, et cetera. And so, building a best in breed UI is, I think, long gone. It's how do you enable the toolkits of their technology teams to be able to drive those innovations and drive those process efficiencies that they're after. But also, in the sector specific plays, like where can you actually deliver real value to a very specific targeted sort of endpoint where maybe a property management might have a different set of concerns than a mining company, as an example, right? Drastically different businesses, drastically different inflows and outflows, and your cash management sort of services and platforms kind of need to cater to that, but at the same point be able to be rooted in the fundamentals of what makes the cash management and treasury operations tick to manage the business. Catering to all of those is difficult, but I think when you start to get into these ecosystem plays, you start to develop a lot of the different platform-based solutions through new technologies like APIs, like faster on-demand services. You can start to really partner up with different entities that are involved in the corporate or the commercial clients' interests to deliver those process efficiencies.
Yeah, I think the only thing I would add to this is I was listening when you were talking about the retail and the corporate. You're absolutely right. It never ceases to amaze me how many new things are coming towards the bank, and it's changing sort of the terminology and the lexicons that a lot of bankers are starting to use, especially as it relates to B2C, like businesses paying consumers, which has become a huge part of it, right? So the fact that gig economy now is critical for a lot of these fintechs to pay out to people. And a lot of these businesses paying individuals all around the world in micro payments. I think one of the things that we have yet to solve in the banking community is how do I send $1 across the world, right? It's just too expensive, too many things happen, and we don't know when it gets there. And so I think ultimately we're all trying to figure that out, but one of the growing segments that you're starting to see, whether it be when cryptocurrency was trying to solve, was exactly that problem. Like, I just want to pay someone, I don't want a lot of complexity, and I just got to get it to someone that needs to get there. And I look around, a lot of the payments, or at least a lot of things are happening today, which is, let's say, the Amazons, the Ubers, the DraftKings, anyone who's touching those, they are just paying all these consumers, and their expectation isn't that you give the corporate all the stuff. They want it because their consumers expect it, right? They are saying, if I drive a car on a Saturday, I better get paid right after because that's the reason I drove my car. There's an expectation. You will always be up, you'll service me and get it done. And it's starting to add a little bit where I think, because I work on the corporate side and the retail side are definitely starting to shake hands a lot more because it's making it a lot more frictionless and there's a lot more you can offer. So I think there is seriously a kind of a come back to let's work as one big bank again, because there's a lot of value you can add.
End-to-end B2C and C2B journeys are critical in this transformation, right? Because there's so much opportunity there to solve both sides of it, but it's definitely not easy.
Okay, great. So thank you all for that. I appreciate it. We've got about 2 more questions. We'll try to get through them. In my 30 years of experience in banking, mostly as a banker, I've come to realize that banks are highly pragmatic, and change really doesn't come that easily, or at least not naturally. And I think there's many reasons for this, right? So first, to no fault of their own, as this reflects an evolution of success, right, over historic decades, banks' operating models and their people and processes lack that agility, right? And banks don't like to take risks in product development, especially when projects, traditionally have taken years to execute. So, open platforms have mitigated this risk, but there's still, I think, much education required in the marketplace for banks on the technology front with certain banks. And then there's the risk-averse elements when you think about data security and due diligence processes to meet some of the regulatory requirements that banks need to handle that are often lacking in other industries, right? So financial services is never the easiest one. But again, I think, the open platform technologies mitigated a lot of that risk as well, and around these gaps. So I think a lot of positive momentum there. But I think, despite some of these headwinds, we've been seeing, at least from a tailwind perspective across banks, a lot of banks that are embracing it. And from my personal experience in working with financial institutions across the world, many banks have actually engaged with fintechs and different models through the open platform collaboration. So my question, and Derrick, maybe I'll start with you here, is as we're beginning to see more banks collaborate with fintechs, do you have any thoughts into why maybe certain banks, some laggard banks, aren't fully embracing the opportunities of partnership that they have to offer?
I think sometimes it depends where a bank is on its life cycle. I'll go back to something that I think quite a few people alluded to, and Cathy, I think you said this a little bit, which is sometimes you're stuck with a legacy system, and you can't even if you do partner with a partner, can you truly embrace all the capabilities that they truly offer? There is quite a few times when I know as I'm reviewing or working with fintechs, it's not so much just that you love their capabilities. You have to say, can I consume everything they want to consume? Can I do it at the same time? Have they gone through the regulatory checks? Because even if that country's regulatory body isn't going to check them, we're going to check them. And I got to make sure that they're on it, you know? I think about some of the things where just as the world starts moving to, and I'll use the word like CBDCs, I see that as a very crucial point for a lot of fintechs and banks, because if there are going to be country regulated blockchains to move money, I imagine to be a node on that one, you're going to have to be regulated. And it'll be interesting to see what fintechs do with that, right? But I think it's just a little bit more than just saying, I like this fintech, they're cool, I want to work with them. I just think that there is a risk part of it. I will tell you, and there's been a lot of fintechs where I just said, very cool stuff, I really like what you're doing, but you've got to get these licenses first, because I can't touch this until you've gotten it. And I think that's a big difference for a lot of fintechs, is to say, oh, okay, well, that's going to add a little bit more money and a little bit more complexity to this, and say, yeah, that's our world. You know, that's just the world we live in to do things. So I think that's where you have the problem. It's not that people don't want to collaborate. I just don't know if they can sometimes, depending on what the fintech's offering or where they're situated.
Absolutely agree with you, Derrick, and quickly pitching in here. And I'm seeing that also evolving from a bank point of view. I mean, initially we were like, don't touch it, stay away from it, from let's collaborate. And it's a journey. It's a journey. We all learned how to, I would say, evaluate the risk, how to trust each other. And maybe we're finding slices where we can extend that to our partners and then trust each other. So it will take time. It will take lots of due diligence from the partnership point of view. And then there is evolution of the point I was alluding earlier, is there are bigger and more trustworthy fintechs out there which we can partner. So they're also learning about the rules and regulations we have to live through. I mean, from my commercial bank, I always hear like AML. That's a big nightmare, right? How do I know the payment I'm receiving has gone through all the checks and balances that I'm supposed to do? How do I know that? How do I know that this fintech is handing me over this payment message? How do I know that it has been validated? So those questions we're seeing getting answered more and more. Also, our risk partners, whether it's legal, whether it's privacy, whether it's our AML team, are also getting up to speed and working with this fintech to solve this in a collaborative way. So I think it's an evolution, it's a journey we have been going through, and we will see more and more partnerships as we get more comfortable sharing knowledge and customer information.
Yeah, two threads really to pull on there, right? One being that maturity of evolution, Asad, that you're talking to, sort of how mature is the various areas of the organization in terms of understanding the risk reward side of a given partnership or a given sector of partners that might be being looked at and assessed. And two, Derrick, the timing piece of things, right? And timing is I think a big piece of this. Timing, is it right for you as an FI to partner? Is the market ready for whatever service is being sort of conceptualized around that? Is the timing in terms of the roadmap of investment that's currently taking place? You look at the things that we're doing here in Canada, and there's a lot of weight on the FIs to deliver on the massive mandates that are hitting us and coming online here over the next short while. How do you balance all of that in a well-timed way to deliver a partnership that's going to get the end customer value props into market at the right point where you get the adoption to start to drive the success, right? It's hard to balance all of that, and I think timing is a big piece of it strategically, but timing also in terms of that maturity curve of where the rest of the organization might be and sort of buying into a given partnership, given the value prop that might be presented.
Okay, great. Go ahead. Sorry.
Sorry, I just wanted to tie back. Asad started the conversation with dating. You use payments in dating, and this is is the partner credible, stable, secure? I mean, I think that is number one, and that would not pass any muster for any of us if we couldn't get that from a partnership. Is the level of maturity, to your point, Dougal, and the timing. To me, this is also about the fit. So I think of an organization like HSBC, we're incredibly global. And so a small fintech with a founder and a developer in, I don't know, Sao Paulo, Brazil, may not be the right fit for HSBC, given the global footprint and nature of the business, versus a Finastra or a Tieto, who are large global fintechs. That would be a better global fit. So I think this idea of fit, which will be different for all of us on this call, is an important thing to note, much like who you choose to date. Sorry, Asad, you started it.
Okay, so listen, I'm trying to, we have like 8.5 minutes left, so we're going to wrap up. We do need to go to the audience. We do have some questions that came in, but I'm going to give you an opportunity, and sorry about this, it's like 30 seconds. Can you guys just give the last question, just closing thoughts? What do you see the future holding for how banks approach change and how they will work with fintechs across the next 5 years? Just very quickly, any order.
I can talk super quick. I think right now we're at a really important inflection point in the modernization journey. There's a lot of fundamentals that are coming online here over the next couple of years here in Canada, and with those fundamentals, it comes down to what are you going to do with those now that they're in market? How can you leverage them to develop partnerships around and really use those as sort of the core asset base, if you will, and maybe start to extend better experiences or better service and value props into your end client base through partnerships. So it's really about that constant state of change that we're in. I don't think that stops. Payments is such a dynamic environment that we'll have a constant state of change. Is about how you make sure that the fundamentals are being leveraged through different partnerships to add more value into those ecosystems that are the target place for you to play.
Yeah, and I'll take that cue and I'll say that we are in this huge horizon of payments modernization, where most of our energy being spent today in the regulatory and the network-driven modernizations, and we are seeing that the end of the horizon soon. And the next horizon would be how do we consume, how do we make sure that whatever we have built infrastructures, how do we make sure they get most value out of it, whether it's through partnership, whether it's through creating net new products on our own, or whether it's leveraging other capabilities. So when we get to that juncture and we are preparing for that right now, we will see more and more partnerships as I assume.
I'll just add this. I think that the fact that you're starting to see more bankers go into the fintech world and more fintechers go into the banking world, like myself, is a very good testament that there's going to be a lot more partnership, because that doesn't happen. They're starting to speak the same languages, and I think that's a very key part of it.
The nucleus is trust. I think we were talking about an ecosystem and financial institutions. That's the trust. That's the nucleus. As we move forward, I see in 5 years, it's going to be quite a complicated Venn diagram with all sorts of fintechs playing in this ecosystem, including each other as competitors, being able to deliver that end user experience that customers are incredibly impatient for, whether it's retail, commercial, small business, or corporate. To me, that's the view in 5 years.
Okay, great. Thank you all for that. I appreciate it. We're going to go to the audience Q&A. We've got about 6 minutes left. One thing I want to remind everybody is to click on the link in the chat to enter a chance to win a pair of Bose earbuds, right? So that's a little perk for the audience. But first question that I see here in our internal little chat that I'm looking at is, I don't know who the question came from, but it says, what exactly do you define as a fintech? And then it said, is Robert's firm Finastra or anyways, they want a definition of a fintech. So fintech to me is a financial technology company that generally sells financial services, banking solutions or financial services solutions, in the market. I think to answer your question, yes, Finastra is a fintech. I think the difference though from us, and I don't know if it makes us unique, as in the only one, or if there's another one out there, but we don't really sell to the marketplace. We don't go after consumers, small businesses, corporate, commercial. We partner with banks. We have 9,000 banks as customers, and we partner with banks in an open, collaborative way to bring other fintechs into the loop. So our operating model is different. But is there anybody on here who wants to answer that question, or wants to take a stab at it?
Yeah, I think it's a broad definition, really. To your point, it's about, I think, what market are you after? As that technology or that fintech provider, right? Is it business, corporate, B2B? Is it consumer value props, or are you selling to banks? And so it really does take a wide spectrum. There's many of them, big, small, everything in between.
Okay, great.
I just want to say, I think that's one thing you're going to start seeing in the future is other businesses are going to become fintechs that you never thought of. I think Apple will be considered partly fintech. Google, will be Uber. There's people who are going to start expanding because they can start expanding, and you'll start seeing them get a lot more to fintech.
I think the operating model is a key aspect of it as well, as you quickly alluded to, Robert, and that would be key. Also, we might see some specializations as we see like retail focus, commercial bank focus, B2B focus, C2B focus. So we'll see more specializations in there.
Great. Next question seems to be for Derrick. It says, great point. How do you define gig economy and opportunities around it from new business model perspectives?
Yeah, I guess I kind of think about gig economy is right now you're starting to see is a lot more people incorporating themselves as a business, right? You can kind of imagine that people doing work out there in the market, such as an Uber driver, in a sense, could be part of your gig economy, getting paid. An influencer on TikTok or Instagram. These are people who have incorporated themselves and they're getting paid like a business, but they're all over the world and they don't have a big account, but they're an individual and a business and they need to get paid. And so that's the gig economy that a lot of these fintechs and now banks are really starting to get into.
So the next question, I can only read half of it because if I try to scroll, it like scrolls past the question. But it says on the CBDT subject, what about stablecoin for cross-border payments? Those are less likely to be end-to-end regulated. Any ideas on how this could be? And then I can't read the rest of the question. I don't know if you guys can read it. Anybody want to tackle that?
I'll start and I'll let someone else. I mean, stablecoins will not be regulated more than likely. But I think if CBDCs come into the market, that's probably going to be the biggest disruptor to cryptocurrencies out there, right? Right now, people use cryptocurrencies because it suits a need or they see it appreciate and they see it as a digital asset that they think they can make quick money on. But if they're trying to use it to move money, if a CBDC that is regulated comes to the market, I can see that really disrupting cryptocurrencies. There's a lot to that question, I think, and I'm answering it very quickly. So hit me up later if you want to talk more about that.
I think it's a whole other panel discussion.
Yeah, exactly.
That is another panel discussion. We have a bank customer here in the U.S. that basically is using our payment platform, and they have kicked off they're supporting the Facebook DM product or currency. So that is an entirely new subject, entirely different subject. I don't think we'll have time to get into it. In fact, we are out of time. I'm not going to be able to get into any other questions, but I would like to thank all of you, Cathy, Asad, Derrick, Dougal, for being on the panel today. Your insights were awesome. I think the quality of the questions that the audience gave were really good, and I think the discussion was right on point. So I just wanted to thank everybody. I want to thank Payments Canada for the opportunity, and I look forward to next year. Maybe we do this in person. What do you think? Are we going to get back to normal?
Yep, hopeful.
All right, very good. So thank you, everyone. I appreciate it. And again, I'm Robert Mancini. Thank you very much and have a nice day.